Absolute wealth. Real investors, real results.
All right, Hubert Sanders here. Let's take a look at the FOMC 123 trade. So this is a good trade that you can do anytime you have an FOMC meeting announcement or notes. And here's how it works. And it's super simple. Anybody can do this if you can count to three. It's the reason we call it the FOMC 1, 2, 3 trade. So here's how it works. It works on index futures, Dow, S&P, NASDAQ, and Russell. And I prefer to do it on the Dow or the S&P. So let's pretend that this was the opening statement or the reaction. All right, and the market went straight up, okay? That's the first reaction, and then down, and then back up. So that's one way of trading the FOMC trade. So what you're going to do is on the reaction from point 1 to point 2, you leave it alone. From point 2 to point 3, you also leave it alone. What I want you to do is focus on the beginning move of number 3 wave, all right? Now, what do? Does it work in the opposite direction? It actually does. So let's say the Fed announcement was here, and there was a reaction. It went down, up, and then down some more. So what you would do is the first initial reaction would be from 1 to 2. You leave that alone. From 2 to 3, you leave that alone. And then at the beginning move of 3, that's where you would short it at. And this works really good, like I said, on index futures, Dow, S&P, NASDAQ, Russell. And then on this play, you would go long. And I like to use a 2-minute chart for this, 2 minutes. You can use basically whatever you want to use, but then I just look at that and I just go impulse move up, reaction down, follow through to the upside. Impulse move down, retracement up, follow through to the downside. And that's how it works. So that is the FOMC 123 trade. Do you have any questions? I'll still record and I'll answer questions as we're doing it. So the first question we have is, do you use the fib tool on the FOMC? Nope, not really. I don't. I just look for the reaction. How far does the second and third leg need to go before it's considered valid? Now, I'm going to erase the writing here, and let's just pretend we're doing the upside FOMC. So we're going to say it starts right here. That's the initial reaction. And the first move, if we're going long, would be up, right? And then it could come down here and retrace this much and then continue higher. Or it could go like this. It could go up and then retrace all of that and then go back up. So it doesn't matter if it's a 50% retracement or 150% retracement. What you're looking for is that first impulse move and then the retracement and then the continuation. Usually the third move is the real move and usually continues. All right, so follow-up question is, where do you place your stops? If you're long here, I would put the stop either there. All right, if I'm long at point 3, I would either put my stops slightly below this point, or on the Dow, I usually use a 20-point stop loss, which is just 20 ticks. Okay, on the S&P, I would use about 2 points, or I would use just a few points or ticks below that most recent low where you actually got long in at.